Good morning. I'm James Twomey, and this is the Twomey Stock Market Report. Today is Friday, 9/23/2022, Friday. So, what's going on in the markets today? As we spoke yesterday, a couple of indicators of the market nearing oversold. Are we in for a bounce? Are we going to break the June lows, or are we going to continue further down to the next level of support at 3,200 on the S&P or the, and that's really the question at hand right now. Some sentiment is really negative. It seems like everybody is not capitulation. I don't want to use that word, but everybody is starting to look at how they can start going towards short-term treasuries, municipal bonds, and get somewhere between 3.5% to 4% rate of return within a year to two or more. So with that, money will flow out of the stock market into conservative areas, even though interest rates probably will go higher and those yields may go higher. And that's going to put additional pressure on the stock market advancing, right? So it's going to be harder to advance, translation. So where are we right now? We're going to go to the charts real time. The market just opened. The SPY, our proxy for the S&P, the relative strength index is down in the 29. Anything mid 30s, I say we're in oversold territory. Under 30, technically, the RSI oversold. This summer, the RSI has been a terrific indicator and it typically doesn't follow this once in a stable market, but in the volatility market like we've had, once the RSI has gotten down to the lows and gotten near the trend track lines that we have on the lower margins, the market's been rebounding, and the same for the opposite when it gets overbought. This time, we're going to have to wait and see. So before you start taking that risk trade, let's take a real look at the charts. So we're going to go real time to the charts. This is the SPY, the proxy for the SPY, S&P. And right here, today is Friday, daily chart, RSI 29.3, so 29.48 right now, real time. The stochastics down here are slow, our fast oscillator, which we don't trade off of, but we use as kind of an indicator at these extremes. That's in 0.28, and it was 0.03 not too long ago, so last week. So we're definitely down in some marginal territory, all pointing towards a bounce. It's our Twomey trend track line. We've broken that. We're well into the year-to-date overall down trend line now and heading towards the lower boundary there. We talked about earlier this week in our weekly report, the supply line. That whole summer before the rally took off, there was about 4 weeks of pretty much equal buying and selling, and therefore this supply line looked like it was going to be an area of hold. Well, we broke the lows of that, and it looks like it's going to want to test the lows of June here. Down around 32 and change. So 362 and change, excuse me. So 3,600 area. If we break that, where do we go? I'm going to go to the weekly chart for that. There is a potential to get down here to the 3,200s from 3,600. It is really the first target bottom we had, and I'm not in the prediction business. It was around 3,500. The second was around 3,200. That's off the COVID lows. So with that said, we're going to take a look at where this market goes today. Typically, for risk traders, I might be saying, hey, now's a good time to take a small position on the long side, anticipating a bounce. But with the sentiment that's changed out there, I would say, wait. We're nowhere near a buy signal to go long. We remain short on the indices and the bonds. And, if we look at the RSI on the long side, it's up against our upper trend track line, which has been typically a repellent area. The RSI is 71, well overbought. So what I would suggest here is really if you're short, hold your short positions for sure, right? We're nowhere near a sell signal there, and we're nowhere near a buy signal long. Um, I don't know if I'd take a risk trade just yet on going long based on the RSI and the stochastics, because it's just not playing out right now. Let's see. So that's our thought for today. And if you've been following us, we're long. We're short bonds on the 20-year Treasury. We're up 21% now, almost 22. And that was a 812 buy call. On 829, we had the buy call for the indices short, and we are short now, and that's running anywhere from 8.2 to almost 12%, depending on which indice you're short. So we've got some room. We're going to raise our stops, 1/3. Look at Twomey Stock Market Report for all that. That's the number 2, mestocks.com. That's where you can get all your information, view our trades, newsletters. It gets updated once a week there in our weekly video. And then you can also sign up to receive our real-time alerts on our we sent out several alerts this week, and we're sending out some more today. So any questions, email me at info@twomestocks.com, and we'd be happy to help you out. I am James Twomey. Enjoy Friday and be very cautious, even though RSI and the stochastics are saying a potential bounce. Have a great day.